So you can make 5%, 10%, 25% more if you sell at a strike which is hot and traded than if you do it in Uniswap.
If you're a Uniswap market maker in V3, you would recognize that if you're out of range, no longer earning trading fees and 100% stablecoins, but then to the downside here, it's a straight line down because you'd be 100% BTC.
Yes.
And it'd be going
you
down.
have one BTC in your position, the BTC price collapses to 10,000, hopefully not, then you're eating that loss.
Yes.
So,
yes. But if you're in range here,
yes,
this line then moves upwards.
Yeah, exactly.
Right? Like the whole graph moves up as you collect fees in range.
You can see that P&L shift up the more you wait.
Yep.
So this is, again, somewhat similar. It's very Uniswap V3-like. We just display it, the biggest graph you can on the interface.
Perfect.
The key point, why do you want to use Panoptic as opposed to just use regular Uniswap V3 position? So you
Hey everybody, so it is Jangle here. I'm here with Guillaume Lambert of Panoptic. I know a lot of you all are familiar with Uniswap V3 and market making on Uniswap, and if you are, you've likely seen some of Guillaume's tweets and blog posts about comparing V3 market making positions to selling options. So I know he's been hard at work over the last few months or years building tools related to V3 market making, and now you are the founder of Panoptic, and tell us more about what that is.
Yeah, so I'm the co-founder of Panoptic. We're taking the ideas that I've been pushing for the past, again, year and a half. It was UniV3 is like an options protocol when you provide liquidity, and you're better adapted to be successful if you think of it in terms of setting options. That was fine for me, but then in the end, we wanted to take this to the next level, so my co-founder and I got together and said, can we actually create a fully fledged options protocol, not just selling options, but buying options, creating more strategies that help for risk management, and not just kind of providing liquidity. So this is the result. Panoptic is currently in alpha or pre-alpha, but the key thing is that we are reinventing options. So the same way that Uniswap got rid of the order book to make swapping easy, we are also rethinking options a little bit. It's still based off of Uniswap V3. If you know UniV3, it's going to sound very familiar, but your positions don't have expiries. And also, the fees you collect start at 0 and increase over time. So this is the reverse of what you see in TradFi. Typically, you get paid up front, or you have an expiry, meaning in a week, in a month, you have to exercise. And if it's worthless, it's gone. Here, it's a perpetual option. The premium is streaming over time. But at the end of the day, it's very similar to what you have in, again, Uniswap V3. So this is our interface. We're extremely proud of it. We spend a lot of time and effort to make it accessible to retail users. Again, options have been around for decades. Institutions know about them. It's a very powerful tool for trading. It hasn't been very easy for traders at the retail level to trade with them. So this is, again, what we want to target is mainly degens perhaps, but DeFi native users that know about LPing, know about options a little bit, but haven't been able to trade them. Their interface will make it easier. So what you have here is, at the end of the day, this is a Uniswap position, and you can interact with it. The range of your position is this shaded region, but if you want to be in range or out of range or inside, when you land on a specific payoff curve that you like, this on the back end will deposit the funds in Uniswap, allow you to kind of keep track of it. There's going to be an NFT issued to you as well. But this payoff is what you get if you do trading in Uniswap now. What would bring in...
Real quick, so this would be like a regular V3 position. We have Bitcoin, wrap Bitcoin as the asset, and
DAI,
if the price, wrap Bitcoin and DAI. So if the price is between 32,000 and 39,000, you're making fees.
Yeah, this is your range, you're making fees. This is slightly above, so you put in 1 Bitcoin in that position. The price will only accrue fees if it's within that range. And if the price goes up, you collect fees, you sell the BTC on the way up, you get more DAI.
And that's why, like if you're a Uniswap market maker in V3, you would recognize that if you're out of range, that's why your profit is flat, essentially, right?
Yeah, because 100% stable coin.
Yep, no longer earning trading fees and 100% stable coins. But then to the downside here, it's a straight line down because you'd be 100% BTC,
Yes.
and it'd be going
You
down.
have one BTC new position, the BTC price collapses to 10,000, hopefully not, then you're eating that loss.
Yes.
So,
and
yes.
but if you're in range here,
Yes.
this line then moves upwards.
Yeah,
Right?
exactly.
Like the whole graph moves up
Yes.
as you collect fees in range.
And if you use Ubo, app.ubo.org, you can see that P&L shift up the more you wait. So this is, again, somewhat similar. It's very Uniswap v3-like. We just display it, the biggest graph you can on the interface. The key point, why do you want to use Panoptic as opposed to just use regular Uniswap v3 position? So you can sell options to create this payoff. You can also buy options. And this is how you can manage your risk. So if I were to go on and buy a put option, I can transform this short put into a put spread. In that case, the price could go to 15,000, 5,000, $1. Your max loss is capped. This is how you manage impermanent loss. This is how you limit your risk. You buy protective puts. You buy options on the downside so that you don't lose and then you're protected. This is something you cannot do currently in Uniswap. You cannot, this is technically shorting a LP token. You cannot do this currently in Uniswap. So that's how you can manage your risk by buying a put option. Or if you're like me, I don't like to buy options that much. I would hedge my risk by selling another option. So here, can transform this into a strangle or a straddle. And in that case, I have some exposure. That means that I can gain on the way. If it goes up or down, I lose. But if I stay in range, I get twice the fees because I sell a put and a call at the same place. And the whole logic is also kind of handled from this interface to Uniswap. And last thing, if you want to be even more creative, you can add more options and create what is called a iron butterfly. You can still be delta neutral, but you can combine up to 4 legs and be protected on the upside and downside as well. So in that case, the price could go to 5,000 or 100K. Your losses are capped, and as long as you were in range for the time you want, you can be profitable.
At a first glance, you might think, why would I enter this position if such a large percentage of the surface area is red? Well, if you got to remember on the back end, it's market making,
Yes.
right? So as the price spends more time within the market making range, this whole graph just moves upwards.
Yes.
Yeah.
So you can imagine being in a risk-free position where you, I don't know what this might be 20% or 25%. If you're extremely lucky and there's price churn, you can get to a point where the whole thing is green. You never lose.
Yeah.
And that's how you can be profitable. So again, you have your risk, you can close 1 leg, 2 legs, you can actually manage this. But the key point is that you can tune your risk. This is a lot more risk averse than something that's a little bit higher like that. But you make a little bit less money. So the risk return profile are much more aligned when you deal with options than when you deal with a LP position, which is just selling puts and not doing much. So let me go back to the beginning. So this is how we want to kind of have people come in. You want to buy options, you want to sell options. The visual representation is what drives you. Here, it's very easy that you have some type of upside exposure. If the price goes up, this is buying a call option. If the price goes down, you have limited losses. It's a better perp to some extent. You don't have liquidation risk. You have unlimited upside, limited downside. That's why call options and put options are traded so much. It's actually a very, very capital efficient, leverage way of trading.
Wow. And so on the back end, obviously you're using V3 to create these positions, but there's also a native lending market, right?
Yes. So again, when I buy an option, I can only buy an option that's been sold, and there's 2 components of lending. So the first one, buying an option, is shorting an LP token. So market makers will have to sell, will have to kind of fill the strikes if you want. And if there's no liquidity, you may not be able to buy. If all the liquidity is gone, you're kind of locked. But here we sold a bunch. But yeah, we're pretty liquid here. So you can pretty much buy all of them. But then here, it jumps. Like there's no liquidity there. So you cannot sell the 5,000 put, buy the 5,000 call, it jumps. But that's one aspect. You need to have market makers, a healthy ecosystem of sellers, which is what you guys are doing, to fill the strikes. Degens will come in, buy the options. So the key point is that as a seller of Panoptic options or provider of liquidity, you get the fees and they're distributed to you.
Yeah.
That's fine. If you sell an option and someone buys it from you, they pay you back more than what you would have gotten. So there's a spread term that exists. So you can make 5%, 10%, 25% more if you sell at a strike which is hot and traded than if you do it in Uniswap. So there's going to be a market. You can trade on not just price movement and price action. You can trade on volatility. If everyone wants to buy the 40,000 call, you can sell there and get twice as much revenue, for instance, than if you do it on Uniswap. So the interaction between sellers, liquidity providers, just as you guys, and buyers will be a lot more organic, and you'll go where the market goes as a seller, as opposed to just be, oh, I'm going to go in the Shiba Inu pool because I think it's a hot commodity now. But now you can be more directional, looking at volatility and where people are buying.
So it's interesting you mentioned the Shiba Inu pool.
Yeah.
What assets does Panoptic support?
Yeah, so we're based on top of Uniswap, so any asset pair in the Uniswap ecosystem can be transformed into an options market. So there's going to be a factory smart contract. You can deploy pools on top of any pair. Shiba Inu, Pepe from day one, you can trade, buy and sell call options, pull options on those. So we're very permissionless. The whole system is immutable. You just create an options protocol on top of any pair that exists. So Pepe or WorldCoin, all of these new tokens that take weeks to get an Oracle feed, as long as there's a Uniswap pool, you can trade on day one. And so going back to going to that point, so again, if you provide liquidity in Uniswap, you get X. If you provide liquidity through Panoptic, you get strictly better returns because of that spread if someone buys the option. So again, the transition will be organic for those that are existing LPs because they can do monetarily better in Panoptic because of that buying component. Someone is willing to pay you more, might as well take this opportunity and get more revenue. Sometimes options trading can be difficult, and the best strategy could be to do nothing at all. This is what we can do as well. So you can come in, and even if you don't trade, you can deposit funds. You can deposit your Shiba Inu, your Pepe token, your ETH. That fund will be, again, like a lending market. You can allow these funds to be borrowed by traders. So currently, I go on Aave or Compound and borrow tokens. Now it's all integrated within the Panoptic ecosystem. So Panoptic is again, LP management and also lending protocol of some sorts. So coming in, you can deposit your funds, be a passive liquidity provider. We like to say we bring back passive liquidity provisioning to Uniswap v3 because your funds get borrowed, they get traded by sophisticated players. You get exposure because you get an interest rate from that borrowing activity. So you can actually be able to generate revenue without even having to think about ranges, price impact, anything else. So
and that could be single-sided liquidity providing?
Yeah, you can dump your ETH, you can put it in the ETH USDC pool, or the ETH Shiba, or the Hex pool if you're extremely risk-taking.
And so then are you inadvertently exposed to the impermanent loss of those pools?
Yeah, so
how extreme is that?
As a passive liquidity provider, you put funds, you get more funds back of that type. It doesn't get transformed. You put ETH, you get ETH back. You put USDC, you get USDC back. So this is kind of the default state. There's no impermanent loss or no asset conversion on the PLP side. One caveat is that if there is a Luna-style crash,
or maybe a Pepe-style run?
Yeah, exactly.
Okay.
In that case, you don't lose funds, but you're exposed to impermanent loss. There's liquidation that should happen if it collapses 98% in 2 blocks. Unfortunately, the PLPs that chose to put their ETH in the Pepe pool will get more Pepe out. They are similar exposure than LPing. But then if everything goes well, we capture these events earlier, we liquidate the assets first, and then PLPs aren't exposed to that risk.
Okay, and so the exposure to something like Pepe or any ERC20 token from you call it PLP?
Yeah, passive liquidity provider.
Okay,
yes.
From the PLP side in the lending protocol, that is like an isolated lending pool.
Yes.
Okay.
Yes.
So you can mitigate your risk of, impermanent loss affecting the whole system.
Yes. And again, if you're a trader buying or selling options, you're also a PLP. You have to deposit collateral. You get more back, even if you do nothing. But if you trade, you get some interest rate. But yes, we're again, you have to tap into this capital efficiency to be successful. If you only create what they call cash secured positions, or if you do it V3 style, it can only get you so far. You have to have some capital efficiency, otherwise your capital is locked up. So in our case, we allow 5x leverage on selling options. This is like the TradFi limit that retail users can access, and we're comfortable with it. We don't push too much, but coming in, you can sell, again, 5x leverage options on the sell side. You can buy 10x leverage on the buy side. And again, it's good for speculation, but basically it's better for risk management and capital efficiency. You don't have to have all your funds locked in. My advice is to keep 50% of them as cash or unused, and the other half is where you trade with. If there's a crash, up to 50% you can manage them in a way that's not going to wipe you out.
Not financial advice.
Of course. But if you trade options at 100% capital utilization, you're asking for trouble. So same way you don't trade 100x perps with all your account, I guess.
Okay. Wonderful, awesome. One more question. So earlier you had 2 positions. You had, I think, buying a put, maybe selling a call, or you had 2 separate positions where you were mitigating your downside. I just was wondering, if you have multiple ranges here, like there are 2 ranges here, and if the trading price is within either of these ranges, this whole graph is moving upwards.
So this is selling. If it's in that range, it's going up. This is buying.
Okay.
If it's in that range, it's going down.
Okay.
So you get push-pull on both sides. Then if you can do some overlap, and then in that case, it's going to be like super weird. But yes, the buying lowers the P&L chart. Selling moves it upward. And then this is the piece of the like Pièce de Résistance. You can create a short perp exposure. So the same strike, sell an option, buy an option. It should move like net zero, but you get exposure to a short perp without having to go on GMX. You can do it with options on Panoptic, which under the hood is Uniswap V3 positions. You can do it short perp, you can also do it long perp. This is the stuff that, again, will be easy for folks to kind of trade.
Very cool.
No need to go on a different protocol. All of it can be done in Panoptic.
Very cool. Tapping into the liquidity of V3, adding to V3 liquidity. When are you launching? Where can people, because this is, something people might want to play around with and take some time to chew on.
And options even are difficult, and you don't want to throw folks to the wolves and then they buy all the calls options and they lose. So yes, this is in pre-alpha mode. We were able to get this to a point where it's pretty close to being launched. We have a few Discord users that were able to kind of preview this. Now this is also kind of another official launch. We'll be launching this quarter in a gated launch fashion on a layer 2. Some folks may have signed up for a better launch, but ultimately we want to launch on Ethereum mainnet in late Q4, early Q1 next year. We'll go on all the layer 2s. It's pretty gas efficient on mainnet, more gas efficient on layer 2, so everyone can actually participate. So we'll go everywhere where there's Uniswap. So again, Q4 to Q1 this year.
Awesome.
Yes.
Well, Guillaume, thank you so much.
Thanks, Jonathan.
Really excited to try it out. Thanks for watching, everybody.
All right. Thank you.